Let's go to Diane King Hall to talk some stocks in New York. First, with an upgrade on Nike. As it seems like the street is warming up a little bit now to Nike, seeing more and more positivity. Diane, what's the latest?
Yeah, Nike getting a little bit of love, but we'll call it measured. Right? It's a measured moment for Nike from Truist getting an upgrade, but it's with some caution around it. And so the response in the market is cautious optimism off the back of this upgrade from Truist. So Truist is boosting its view on Nike. They've boosted it now to a buy. They previously had it as a hold. Their new price target is $97 a share. That's up from $83 a share. It reminds the street, Truist reminds the street that, look, it has been cautious on Nike since the fall of last year, which makes sense in the context of the challenges that we've seen Nike face over the past year. It says it is, quote, more optimistic, though it does view the turnaround process as long and uncertain. They said, look, the recovery picture, the fundamental recovery, is a long-term prospect, but being that there's now a team of veterans back at the helm of Nike, they think that it is moving in the right direction, and they see that Nike logging some near-term wins for the company. Nike certainly needs that, given the difficult year it's faced. But we know that, look, it's brought back old leadership to run the company and kind of change directions from the challenges Nike's faced, especially when it goes head-to-head against On or Deckers, the parent company of Hoka, because it's really lost a lot of its edge within the competitive landscape. They said, look, of course, we know that they posted mixed results off the back of their last quarter. Their sales had come up short, and we saw some declines in both the DTC space, direct revenue, and digital sales. But Nike has been making some changes. We know Elliott Hill's coming to run things there, so that's one of the things that Truist now views as a plus for the company. So the stock is being rewarded with a slight advance at the moment. And it's kind of, it looks like we'll wait and see, but Truist getting in front of the potential for gains in this company.
All right, well, look, it's up in a down market this morning. So Nike trying to break free a little bit from some of the malaise it's been suffering, but also, it hasn't really blasted off since the leadership shift, so it's kind of been a little bit stuck. Well, let's talk some other retail, maybe a little bit more reliable than Nike's. Costco, we did get some numbers.
Yeah.
Sales, high single digits.
Costco. Yeah, Costco, look, out with its sales. I mean, we know that they give us an indication of the direction things have been moving, especially in the context of that increase that they made to membership. So you saw revenue rise 9% year over year for September. So that is an increase rising to 24.62 billion. That's up from 22.59 billion the same period a year ago. So that was an increase. We saw total same-store sales rise 6.7%. That accounts for 6.5% increase in U.S. comps. E-commerce sales jumped nearly 23%. One of the reasons that Costco said it saw sales increase was because of shoppers appearing to do more prep in the face of the not the most recent hurricane, Hurricane Helene. So you saw shoppers doing some more spending, and that leading to a boost in sales for Costco. So they highlighted that. You saw some upgrading of targets off the back of these results for Costco. Evercore ISI boosting its price target to $9.90. They previously had a price target of $9.85 a share. They are maintaining an outperform rating on the stock. You're seeing Oppenheimer boosting their price target to $980 a share. They previously had a price target of $955 a share, maintaining an outperform rating as well. Stifel's new target is $935 a share. That's up from $925. They're maintaining buy rating on Costco. Goldman boosting its target to $1,005 from $995. So Goldman boosting its 4 digits. They are maintaining a buy rating. Shares are a little bit under pressure, but given how much shares have run year to date, that's not much of a dent in Costco. Okay. The stock is up more than 35% year to date.
Yeah, we're not too far off the $924 high and change. Really pretty close, for a $900 stock. So it is coming off a little bit, though. Maybe some of the expectations were somewhat higher here. On the terms of like real negative downside, though, let's talk some PayPal, down 3%. It's actually had a pretty nice move here since the last earnings, but now a downgrade this morning.
Yeah, PayPal is under a little bit of pressure this morning off the back of a downgrade. Bernstein has downgraded their target and their rating on PayPal. They've downgraded it to market perform from outperform. Their new price target is $80 a share. That is actually an increase from their previous price target. But shares of PayPal being dinged off the downgraded view. The stock now under pressure by nearly 3%. Bernstein talked about the competitive landscape. They said, look, the reason for downgrading their view is intense competition on its core cash cow button. They said they're worried about competitive pressures in that space. They see it as, quote, richly priced compared to its peers. And they talked about just even other things like newer efforts they don't see being able to add to momentum at PayPal. They talked about the PayPal Everywhere campaign, which would, that's a part of rewards on its cards. They said have yet to see a significant impact as a result of that on both consumer preferences or gross profit. And they also talked about Venmo experienced share losses and P2P. And obviously that's, when you think about the competitive landscape from, say, Zelle, et cetera, it's facing some pressure off the back of that.
Okay. All right. So PayPal taking a little bit of a hit here, but a really good run behind it. And this analyst had been bullish, so just kind of taking profit. Not the worst downgrade you can get, but still.
That's fair.
Market listening and taking profit. Thanks, Diane.